This episode is sponsored by Realtor.com, who wants you to take advantage of your free profile on Realtor.com. By claiming and completing your free profile, adding a photo, and all of the information that puts you head and shoulders above the competition, you're on your way to receiving free leads, helping search engines find you, and staying top of mind with past clients. To learn more about claiming your free profile, go to Realtor.com/profile.
Welcome to the Real View podcast, where Ohio Realtors connect you to innovators and influencers, keeping you with the real view of real estate. Whether you're a broker, agent, first-time homebuyer, industry leader, or just happen to stumble upon our podcast today, you can expect to hear tips, tools, tricks, interesting information, and so much more from the experts in Ohio's real estate game.
Hi, everyone. Welcome back to the Real View podcast. I am your host, Allison Wiley. Joining me today is our special guest, Chad King. He is CEO, founder of Titan Capital. From a young age, Chad was interested in understanding wealth and prosperity. This quest to understand money led Chad to get finance and accounting degrees from Florida State University. After college, he took a job at Xerox selling copies door to door, understanding that salespeople can control their own income. He mastered the game, becoming the #1 producer in new business at Xerox in just his second year, and then the youngest VP of sales in company history. He was simultaneously studying successful individuals who had achieved tremendous wealth and prosperity. He noticed a common theme among them, real estate, and I think that is where we come into play here. With an amazing woman by his side, he jumped into real estate full time, and Titan Capital was born. Starting out in wholesale, fix and flip space, he has completed over 400 flips in his career. Apartments were always the end goal, and Chad was able to take his active income from flipping and begin acquiring commercial real estate. He continues to focus on his skill set, which is finding and negotiating great real estate deals. Chad has completed 21 commercial real estate acquisitions, 9 full cycle exits, and currently has $122 million in assets under management of various types of commercial real estate. While he's relaxing, you can catch him on the golf course or hanging out with his incredible wife and 2 children. He is now the owner of several companies in different verticals, an accomplished investor and a business coach teaching on acquisition, sales, investing, and income stream building. Chad's passion is teaching others how to build generational wealth through investing assets. Chad, welcome onto the show. And wow, what a robust and inspiring journey you've had so far.
Thank you, Allison. Appreciate it. Thank you for having me on. I'm excited to talk shop.
Yeah, me too. And I'm really excited just to dive into everything around, your experience, your perspective, what you've been able to learn along this journey. And I always like talking to guests who are passionate about teaching and education. And so that's really what I hope we get out of this. It's just a great informational episode on how to be successful, how to do this thing called real estate investing and how to do it well. But before we get started in that, I would like to hear a little bit more about you, Chad. Tell us about what made you so interested, in real estate. I know I went kind of some of your initial thoughts as I went over your bio, but with your degree in finance and accounting, was this kind of always something you were interested in? Did you kind of just find interest through watching others have success through it, or what really drew you to this industry?
So I will tell you that through my quest to kind of understand how money worked and how wealth was created and how so few people came to accumulate so much and others seemed like they were fighting for scraps. I was just studying and peeling back the layers of successful people and wealthy individuals. And I just kept seeing real estate. I kept seeing the bulk of their wealth was secured in real estate. And it was like a bug that I couldn't shake. And, I did the other stuff, read Rich Dad, Poor Dad, understood assets versus liabilities and all that kind of stuff. But every time I looked at these successful individuals that I admired from a monetary standpoint, because of what money allows you to do and what it allows you to create, I kept seeing this real estate thing pop up. So I think it was only a matter of time before I just quit my job at Xerox and jumped in full time, and then sort of had to tread water and figure it out, because there are blueprints out there, but there's no you kind of have to figure it out, right? So that's where, I started flipping houses in order to replace the income that I was making at Xerox. And then that ultimately led to, scaling up a flipping business which led to a tax problem and no residuals and sort of a hamster wheel that kind of created a whole nother job. So that ultimately led to creating real wealth, which is done through holding commercial properties, holding a real estate, cash flowing properties that have this residual, it has tax benefits, and it'll build your net worth and all that good stuff. So yeah, it was just a quest to understand how the wealthy people became wealthy and then just follow the blueprint.
Yeah, I think that's really interesting, that you recognize that common thread, that thread existed. I don't know that I've necessarily ever heard that before. So I think that's interesting that all these rich people, have their hands involved in real estate. So I think that's a really cool observation and something you've been able to use as inspiration and now have taken it and built such an incredible career. So tell us the story behind the founding of Titan Capital, of your company, and what you all do there at your company.
So, well, I have three core values: stewardship, integrity, and results. Those are my core values. We hire, train, fire, lead with those. If you're a good steward, we're a good steward of our properties. We take care of our tenants take care of our assets take care of our investors, and our investors take care of us. And so we are good stewards of our properties. We don't put band-aids over things. We fix them the right way. And it starts at the property level. And integrity is another one at Titan Capital that is big for me, these core values and doing what you say you're going to do. We have a large fiduciary to our investors. We've raised over $40 million for properties. That bio is actually a little old. We've got 24 properties that we've taken, 13 of them taken full cycle. And so we have, over $40 million of investor funds that we manage. So obviously integrity is a big, big thing that you have to have in this industry. And then getting results. Obviously, we've taken 14 properties full cycle with an average IRR of 26% to our investors, which is outpacing a lot of other things that you can get right now. So Titan Capital was born out of what I saw to be a need in the syndication space of people doing what they say they're going to do, buying good deals in good locations, and just focusing on a very specific buy box, which I have our buy box dialed in Middle Tennessee, 80s, 90s, 2000s product, C plus, B minus, $900 to $1,300 price point in rent. Like, this is our working class properties. We know what they are. We know how to operate them. And we focus on that buy box. And I have some mobile home parks, some storage facilities, a couple office buildings and stuff in my portfolio. But for the most part, 85% of our stuff fits in that buy box. And we know how to run it. So Titan Capital kind of came as a much needed transition from flipping houses to creating wealth for ourselves and our investors.
Yeah, I love that. I always like hearing the history and story as to how something became to be. So thanks for sharing that with us. And I know you mentioned that you just threw yourself into it. You followed the blueprint, followed the manuscript. There are also some challenges, that you faced. And you mentioned, that not everything is the same. Not every deal is treated equally. Certainly not. There's a lot that goes into these types of things. What were the initial challenges that you faced when you jumped into this full time?
When you say jumped into this, are you talking about residential flipping or are you talking about buying commercial real estate property?
I think both. When you first got your feet wet into this industry and were flipping houses and kind of doing that, what did you experience and what did you experience as you transitioned into the commercial space?
I think the biggest challenge that when it came to flipping and wholesaling was systems and processes, and developing systems and processes to run your business and then running those systems. I think far too many people get in and they think they're going to do everything and they end up becoming their own bottleneck, and they don't develop any standard operating procedures. They don't track any KPIs. And if you're not tracking your KPIs, your key performance indicators, it's very tough to grow your business, because what you don't measure, you can't improve. And I think I've struggled with that because I'm not a detail-oriented person, and the devil's in the details. And so I like to be on the phone. I'm a sales guy. I like to be structuring offers and talking to people, and getting back to having the systems and processes in place that can drive the business forward was my biggest challenge when I got into single family. And once you figure that out, and I think the next biggest thing is finding good partners, because you cannot do this alone. It takes a village. The stuff we're buying, like I don't manage $122 million of real estate by myself. I got a business partner. Him and I manage everything together. I got another business partner that manage investor capital relations. I have employees at Titan Capital. So you have to build your team. And that, I think, is a challenge right now, is finding good people with similar core values that are hard workers and finding good partnerships. I always have this saying, date before you get married. Like I would buy an asset with somebody before I just jump in and start a business with them, because I've had bad partnerships and I've had great ones. And the bad ones can really be an energy drain if you get into the wrong business with the wrong people. And on the forefront, a lot of people can say the right things, but then when you actually buy a property, now it's 5 to 7 year hold, you're married to that person, and it can be challenging if they're not aligned. So finding good partners is the toughest piece of the puzzle when it comes to commercial. I think the thing that I love about commercial is just it's more logical based. So single family was very emotional. I struggle with that because I'm a logical decision maker, but it was very much an emotional business, that residential space, and commercial space much more logical. So that's one of the beneficial things here is numbers driven. Does it make sense? Does it pencil out for the seller? Does it pencil out for the buyer? If so, then you usually have a deal. If not, there's really no emotion to it.
Yeah, definitely. I understand that emotional side of things. And I know, our listeners and especially our realtors will too, especially our residential folks listening, they say, yeah, I'm a realtor, but I'm also a therapist. I'm also like a life coach. I'm also, all of this in addition to being the one who will lead you through a home sale transaction. So we understand that absolutely. In your opinion, why is real estate the best option toward generational wealth? And I kind of want to hear your perspective and thoughts on this as someone who was interested in it, someone who saw other people have success with it, and now you're having your own success with it, because this is something that we tell people interested in homeownership all the time, that this is the best way to generational wealth. You really want to create a living legacy for your family, that real estate is the best option in order to do that. In your opinion, why is that? And share with us a little bit of your thoughts just on how this can be a great generational wealth builder.
Well, I'll say two things. Number one, a single family home can be a good store of value, but it's not going to create generational wealth like commercial property is that produces cash flow. Because a home in and of itself is a liability. It doesn't pay you, you pay it. You pay the taxes on it, utilities, everything like that. Now, if you can get your home to be an asset for you through leveraging it with a home equity line of credit, if you're financially literate, and you can leverage it with a home equity line of credit and use that money to invest in assets that do produce income, now you've taken your home that's a liability and turned your home into an asset, because now that equity is out working for you at higher rates of return than you're paying on it. And now you've created interest arbitrage and you can start to cash flow positive on that. Okay. So if you don't know what a home equity line of credit is, you should look into it. Prime is a little outrageous right now. So if you got a 2.7 rate mortgage, probably don't refi into a home equity line of credit, but you should look at it because it allows you to tap into equity in order to invest in real estate. That's one thing. Number two, the generational wealth, the reason real estate is going to be the path to generational wealth for you and your family is because it's real. Everything out there right now is fake until you liquidate it and make it real. The 401ks, the IRAs, the stocks, the crypto, it's all paper. It's all paper. It's actually not even paper. It's all digits on a screen until you take it and make it real. You come to my office in Murfreesboro, we can do within a 2-mile radius. I own 885 units within a 2-mile radius. You can see them, feel them, touch them. Somebody's got to pay me to live there. I have 94% occupancy across the portfolio, and the asset is real. You invest with us, you invest into those assets. You're buying shares of that property, and you can walk a unit, you can see it, touch it. And I'm not a particularly smart guy. I just don't like all the fiat fake stuff. So everybody here that's, you're stacking cash, right? I just don't believe in it. Like all my wealth is in real estate. That's it, because it's real. And I'm nervous for all the people who are saving for this like end thing that is supposed to pay them out, when in reality, they should be taking that and buying real things that, number one, have tax benefits. They produce cash flow and they're physical. And that's why I like gold. I like guns and ammo. And I play around in the other financial markets too. I do have stocks. I have cryptocurrency because I believe in a decentralized financial metric. But at the end of the day, I take all those gains. When I make gains in the stock market, I liquidate them and then put it into a real estate deal, because it's not real until you make it real. So the generational wealth side is only created through real things, in my opinion.
Yeah, having that tangible product, something to look at and say, okay, here's where my money is, versus just looking, as you mentioned, digits on a computer or digits in a bank account somewhere.
Yeah, that's my opinion, right? There's people that create wealth in all other areas of life, and that's cool. But you're talking to a real estate guy. I prefer things that are real.
Yeah.
Because those digits in your bank account, something happens and the interest rates spike and you go to pull those digits out of your bank account and they say, no, we don't have it.
Yeah.
That can happen. So I don't know, that stuff makes me nervous when people have too much wealth in one bucket. I'm all about diversifying, but you also have to have a plan for your wealth gain. And then it's from a tax benefits perspective, there's really nothing else better that gives you the tax benefits of this real estate too, because I'm not a huge fan of the government. So I like to pay them as little as possible.
This episode of The Real View is brought to you by the Ohio Association of Community Colleges. Ohio's network of community colleges provides accessible training that accommodates the busy lifestyles of aspiring real estate professionals at half the price of a traditional university. With convenient locations in every part of the state, as well as online options, Ohio's community colleges are your smart choice for pre-licensing education. For more details or to start the journey to a real estate career, visit the education page at ohiorealtors.org and then click on the pre-license course locations.
So you mentioned kind of you have a way that you identify good opportunities and good investments. What are some things that you follow when investing in various types of assets? What are things that you're looking for? What are things that we should be looking for, if this is something that we're thinking about?
Okay, so I'm going to answer this in two ways. I'm going to answer it from an operator standpoint and an investor standpoint, because those are two different things. From an operator standpoint, which is us, I am very much stress testing my deals like we've never done before from an underwriting perspective. So I'm stress testing 0 rent increases for the next 24, 36 months. I'm stress testing my occupancy levels if something were to happen again and where my break-even points are. I'm stress testing my exit cap rates, so my sale valuation on my exit, because you have to exit at some point. Most people do not think about the landing as much as they think about the takeoff, and you need to be thinking about the landing more than the takeoff, okay?
Both are just as dangerous, right?
Well, when are you going to exit? Who are you going to exit to? How much are you going to exit for? A lot of people are overestimating what they're going to exit the property for. And those chickens are going to come home to roost in 5 to 7 years when a lot of your investor returns get made up on that capital event. And now you're 20,000 per door lower than what you projected out. And that IRR goes from a 17% to a 12%. Your investor's not going to be happy. Okay. So stress test your exits. I'm stress testing my rents. I'm stress testing my deals way harder than we were, 2-3 years ago. I mean, we were always pretty conservative with our underwriting, but I'm even more conservative now. I call it hitting them with the ugly stick. Like John, my VP, brings a deal in my office, we beat it with the ugly stick. And then like if it's still fighting to stay alive and the return metrics are still there, then we know we have a really solid deal that can withstand a lot of bad things happening and still pencil well. Okay. From a limited partner standpoint, so an investor standpoint, I am stress testing the heck out of my operators. I've seen bad operators screw up great deals. And I'm an LP and I've been an LP in 27 projects. So I have seen it happen where, it looks like a good deal on paper, but it's a very novice operator. They get in, they don't know how to run a construction budget. That CapEx quickly goes out the window. Then they don't have money to turn units. That has to come out of operating cash flow. There goes your distributions on a quarterly basis. And then you're just basically holding for kingdom come. And then something comes up that they weren't expecting. And there goes your first capital call. And now you're in trouble as the investor. Okay. Because if you don't participate in the capital call, your shares get diluted, right? Et cetera. So you need to stress test your operators. How many deals have they bought? How many deals have they exited? And how many properties do they like? What's their portfolio look like? And how is their portfolio currently performing? Like all those questions. Because when you're an investor investing in a real estate project, 80% of your investment is actually going into the operator.
Yeah. So stress test those deals. Like you said, think about everything that could go well, that could go wrong. Make sure you have something really solid that you feel really great about, before moving forward with that. I think that that's super important. What misconceptions do you think exist out there? Is there anything that you see that comes up a lot in your work that people walk into this thinking a certain way, or that you have to dispel any myths? Or what do you see from your experience as you're working in this industry of the misconceptions that exist out there around real estate investing? Or what are you hoping to correct through your coaching?
That's a broad question. Very broad. I think the biggest misconception is that this is easy.
Yeah.
Like you're going to get your real estate license and then the deals are just going to come, and like you're going to start your LLC and claim your stake as an entrepreneur here. And that all of a sudden the marketplace is just going to reward you for taking the chance. And that's not the case. Now, what I will tell you is it is simple. This business is simple. I'm not a particularly smart guy. It is a simple business, but it is extremely hard. There is so much activity, especially in the commercial real estate space. There is, I would probably say, years of activity that has to go in before anything starts happening. So like all of the properties you walk, all the offers you make, people all so underestimate the amount of deals you have to underwrite, the amount of offers you need to make. I get people that come to me, they're like, I've made 5 offers. I've looked at like 20 deals. I can't find one. You need to look at 200 deals.
Yeah.
You need to look at so many more opportunities than you actually think to make one work. Like you need to walk so many properties. Like I've walked tens of thousands of units. Like I can't even tell you how many offers, right? We are just so adamant about tossing as many lines into the water as possible, right? And then just slowly tending to those lines and waiting for the bites. But people are often like, they'll submit one LOI and then they'll just be like, sit back and like, wait. You need to submit 15 LOIs and like, you got to take more action. The biggest misconception is just activity levels are way lower than what they need to be. Like from a marketing standpoint, if you're doing single family real estate, like you need to be doing 10 times more marketing than you think. From a commercial standpoint, like you need to be looking at 100 times more deals than you actually think. And I think people just, they get into this and they think the deals are just going to start popping up left and right. And it is a tough market out there. It's competitive because the people that are in the space, like the deals are tough to pencil right now based on where interest rates are. I mean, we've closed $40 million in the last 6 months. I mean, we're active investors. Like I'm not a coach full time. I think I do like 2% of my time is coaching. 98% is in this space because I make the most money, doing it. So it's competitive and you got to do way more than you think. And you may be working for 2 years before that first deal pops. But then it's like a domino effect, right? So then the momentum starts. But so many people quit, 90 days, 6 months. They think it's going to be like, I see so many people think they're going to have $50,000 in passive income in a year. Like, what world are you in where you have no capital in the bank? You're going to go syndicate deals and think you're going to have $20,000, $50,000 of passive income rolling in. That's not how it works.
Hey, if it was that easy, we'd all do it, right? I mean, that's a no-brainer.
I hear that. I hear it. Like, it's crazy. So
yeah.
This is a marathon, not a sprint. You need to have the marathon mentality, one day at a time. Focus on winning the day. What do you need to do today to move that needle? And that is going to ultimately lead to success in the space. But that's the biggest misconception.
I agree with you. And I know I've heard many of our realtors just say, people think that you just, like you said, get your license and you instantly like sell 10 homes in a week, and that's just not the case. You have to work hard at anything if you want to be successful. It doesn't happen overnight. You have to be a hard worker. You have to, as you said, keep going at it, continue with the energy every day, take it day by day and just work hard. And, it doesn't just fall from the sky, and it's okay if it takes time. It's okay if, like you said, you're submitting a ton of stuff and they're not going through, but then you finally get that one that does. I think that's important to know and important to remember, even when we're talking about this for sure.
Yeah.
So we kind of were talking about advice and just a little bit about, what people should think about. What other advice do you have for individuals who are thinking about getting started in this space, and where should they even begin if they want to get started with this?
Well, I think the biggest piece of advice for people to get started is, number one, you have to get an education. You do have to get a mentor, a coach, someone who can accelerate your growth. A lot of times you have to pay to get into those rooms. You have to pay to get with those people. I mean, before I even bought a commercial property, I paid $10,000 for 10 phone calls with one guy who had 4,000 units. And it was the best 10 grand I've ever spent. I ended up killing 2 deals before I bought my first one. I put 2 under contract that I canceled. And I learned more from putting those 2 deals under contract than I did from watching 1,000 hours of YouTube videos. I actually learned more from doing it. And he helped me avoid hundreds of thousands of dollars of pitfalls that I would have missed because I didn't know what I didn't know. I'm not telling you that to scare you. I'm telling you that to tell you that you need some guidance, you need a mentor, but you also need to go. You need to build the plan on the way down. The dichotomy of the advice that I just gave you is get an education, but far too many people get stuck there where they always think there's another piece of information that they need to learn, which is true, but you will learn it when you need to learn it, right? And they just hop from seminar to seminar, event to event. They hop from mastermind to mastermind, thinking that they just need to continually educate. And in reality, you just got to go. You got to send an offer, just submit it. Right? You got to go walk a property. You got to go put something under contract, as scary as that may be, right? And just protect yourself from a legal standpoint, but you just need to go. And far too many people spend way too long on the sidelines in the analysis paralysis phase, just worrying about the risks. Listen, there's risks everywhere. You think this stuff is risky? Like, wait till you get the bill for not taking any risks. Wait till 10 years from now, they hand you the bill for not buying any real estate now. It's going to suck way worse than it did if you bought a couple deals. And you know what I mean? It's like that is the thing, is just, you got to go, but also make sure that you have somebody good on your squad that can condense decades into days. From a lesson standpoint, they can condense decades of lessons into days. And I can tell you all the mistakes that I made buying 25 commercial real estate properties and flipping 400 houses. I can give you all those mistakes in, 1 day's coaching, and you can avoid those same ones. So that's important, but you just got to go at the end of the day. Just build the plan on the way down.
Yeah. Take that jump, right? Just,
That's what it's about. It's scary.
Yeah, that leap of faith, it is scary, but then, you do it and you're like, you know what? I did that, I could do it. It wasn't as bad, as you thought. So I want to hear about your future goals for Titan Capital, future ventures. What does the crystal ball say is in store for you in Titan Capital, and what's in the works? What's coming down the pipeline for you all?
I close on $32 million. It's a 355 unit in 2 weeks.
That's awesome.
So we close on a $32 million deal in 2 weeks. It'll be the biggest transaction. We got a $24 million Fannie Mae loan. We raised $12 million. In today's economy is really tough to do. So that's on the immediate horizon. As far as like the 1 year look, I'm very interested to see how November goes with the election coming up. I think that's going to be telltale for how the Fed responds. Unfortunately, real estate and politics do kind of sit side by side, as unfortunate as that is. I think federal politics is just a massive shit show right now. But unfortunately, how that game and charade is played right now directly affects how the Fed responds with interest rates. And that directly affects what we can do in commercial real estate from a buying perspective and how aggressive we can get. Right? I locked a Fannie Mae loan today at 6.3%. 3 weeks ago, closed a 125 unit right down the street. We were at 7.9%. With community bank debt, 7.95. So we're seeing anywhere from 6 to 8% interest rate on our loans right now. Closer to 6 is agency, 7 to 8.5 is community bank debt. There's still deals to be had. You just have to adjust your offer prices, right? They're not 4 or 5% loans like they were 2 years ago. So you just have to adjust your offer prices so that your debt service coverage ratios hit. That being said, I'm just buying more real estate. I got on Wednesday, we closed on a mobile home park. It's a 17 unit outside of Chattanooga. I really like mobile home parks. They have the best tax benefits and they cash flow really well. Prefer the pad rent parks. So we buy a little one on Wednesday. I got another one under contract that closes in like 90 days. So we're buying some of those and just buying more real estate. I mean, I just keep my head down. You don't see me too much on social media or anything because I'm just focused on buying more stuff. I mean, I got 2 little babies. I got a 3-year-old and a 1-year-old. So I'm just focused on, I heard somebody say the other day that I want my ceiling to be my kid's floor. So I'm trying to raise the ceiling for the next generation so that my children can work off of that floor and then accomplish something spectacular from there. And just laser focused on growing the real estate portfolio right now. That's all I'm doing.
Foot on the gas, it sounds like. Full steam ahead.
Full steam ahead. It's like the interest rate is negligible, right? It doesn't matter if it's 4 or 8%. Like people get all scared because of where interest rates are, but like, who cares?
Yeah.
It's all fake anyway.
Yeah.
The money's fake. It's not real. And I'll take fake money at 4% or fake money at 8%, provided the deal makes sense. Right? I'm not saying buy anything. I'm saying, but if the deal makes sense, like, what do you care if the debt is fixed at 8 or fixed at 4?
Yeah. And if you're waiting for a certain number, like that's probably never going to be the exact number you're hoping to see or that you want.
No. And so many people are like sitting there waiting. Like, what are you waiting? Right? Just make the offer at whatever price makes sense with the current debt market, and then pair your debt up with where we're at in the market cycle. And then when you want to land this plane, now personally, I'm getting as much long-term fixed rate debt as possible. I'm not doing any bridge loans, very careful with value add deals, because if November goes one direction, I do think we could see double-digit interest rates. And I do think we could see some serious blood in the streets. And I think if it goes the other direction, I think that we'll see another bull run for real estate and interest rates drop. And then I think after that could be blood in the streets. So either way, now's a great time to buy commercial real estate with long-term fixed rate debt. Anything you can get 7-year terms, 5-year terms if you can get them, but try to get 7-year terms, fix the debt, make sure your property covers, and stress test the heck out of it and make sure, it makes sense.
That's really great advice, Chad. And thank you so much for sharing all this information that you did today. So much to think about, so much opportunity ahead. I know our listeners will be able to take something away from this. So thank you for sharing all of your advice and your words of wisdom. It was really appreciated. And thank you for your time as well.
Of course, Allison. Thanks for having me. Had a blast.
And to all of our listeners, thank you guys so much for tuning in. We'll be back with you next week.
Thank you for listening to The Real View. That wraps up today's episode. You can keep up with the latest on the podcast at ohiorealtors.org/therealview and on Apple or Google Podcasts, Spotify, or wherever you listen. Have questions, comments, or suggestions? We want to hear from you. Email us at podcast@ohiorealtors.org. We'll see you next time.